Right, hello and welcome back to another video. Today we're going to talk about being on the right side of the market. When it comes to technical trading, there's actually little that's more important than being on the right side of the market. Now, that's not including your risk management and your psychology, but when it comes to the actual chart work, this is definitely one of the most important things. Now, the reason for that, if you're trading with the market, you're winning, and if you're trading against the market and you're fighting the direction of the market, you're going to be losing. So, how do you actually get yourself on the right side of the market? Well, before we discuss that, it's important to understand that there are three possible positions that we can hold in any market at any time. These are long, when you think the market's going to go up, you can buy the market. Short, when you think the market's going to go down, you can sell the market. And flat. Now, when you have no directional bias, long or short on the market, you should remain flat. That's all we need to know about the orders. There's nothing else we can do other than then allow the market to actually bring us the information that we need to see to choose which of these three possible positions we should be holding in the market. Now, contrary to what most traders want and what most traders think, the right position to be is usually flat. So most of the time, we're going to be better off actually being flat in the market and not holding a long or short position until the market tells us to and until the time is right. Now, unlike investors, where it's good to be in the market overall, as traders, we are only looking to strike when right, which means that we should remain flat for most of the time. And then if we see a really strong buy signal, we can go long. If we see a really strong sell signal, we can go short. So all we then have to do is wait and wait and wait until an opportunity presents itself that's so good that we can drop the flat position and move into a long position or a short position. But how do we know when it's time to strike with a long or short position? Well, this comes down to three major things. The first off, momentum, looking for the direction of the market breaking out from small ranges. So we have, of course, market ranges where the market's moving sideways, and then we have upside moves and downside moves. The momentum is going to tell us when we're leaving one of those sideways consolidating markets and entering into an up move or a down move. So we need to understand the momentum if we actually want to then strike on a long or short position. The next thing is direction. So this is focusing on the trend and the market structure to see, are we trading in line with the market? And are we actually following the flow of the real market? Or are we just guessing at it or getting in when there is no direction in the market? For example, when the market is moving sideways. And the third thing is points of interest, key levels, taps and breaks of key resistance points, support points, supply and demand zones, all of these things together. So when I talk about momentum, as mentioned, I'm talking about trading the areas where we have these strong pushes in the market, either to the upside or the downside. Now, until we see momentum, we shouldn't really be trading. If we are looking potentially at thinking of buying this market, for example, but it's consolidating in all this time, it doesn't make too much sense to actually get into the market somewhere in this consolidation because you're going to be sitting for potentially days waiting for a breakout. So the most efficient time to actually put our capital at risk is normally when we're going to see momentum pushing out of the sideways movement. Now, this actually moves on to then the direction phase, because that's going to give us the direction of the market when we see that momentum push out of the ranges. For example, as you can see here, we have a trading range. When we see this push up, this could then be the signal that we need to then think, okay, we can begin getting long soon, potentially on a pullback, for example, if you'd have brought down here, or you then know that the market has got some direction and you can wait for the next area to buy. So when we're talking about direction, we're talking about the structure of the market, the ways the highs and the lows are forming. As you will have seen in my other videos, if you've watched any, the market moves in either downtrends where we get lower lows and lower highs, as you can see here, or the market moves in an uptrend where we have higher highs and higher lows, as you can see here. Now, obviously, then we do have the sideways action of a market. That's the phase where we want to remain flat. And we need to know that the market is making some of these higher highs and higher lows, or lower lows and lower highs, before actually taking a trade, because that's what's going to confirm the direction. So, for example, in this market, seeing the pushes to the upside and the market consistently forming higher highs, we know that this market is uptrending. So it would then be wise to look for buying opportunities in line with the trend until the direction changes. Now, the third thing, the points of interest, where we spoke about key levels and supply and demand, this is where we want to focus on those real key rounded off points. For example, here we can see a market which has pushed up, formed a higher high, and then we know we want to come in and form a higher low somewhere, but we are going to need to look for some key levels. So here we've got this demand area, which price is reacting in, and we've also got this very nice rounded off 1.72 500 key level. Okay, the 250s, the 500s, the 750s, and the zeros are the best levels to be looking at entries from. So as you'll see, we don't want to be buying in this point because we don't have any points of interest and we don't have any key levels. But when the market can come in and form a bottom at a key level and at a point of interest, that is where the real trades are going to come from. And as you can see, using the market direction in line with the pickup of momentum here and the points of interest, the demand and the key levels would have provided an excellent trade. So to be on the right side of the market, we should remain flat as often as we need to and strike only when the time is right. And when the time is right is when all of these aspects come together: the momentum, the direction, and the points of interest in the market. So hopefully this little video has helped you to understand how you can be on the right side of the market more, and also given you that little patience lesson on remaining flat and sitting on the sidelines for as long as it possibly takes before a great opportunity comes around. Now, what's important in trading is to make a healthy percentage. If you have a good strategy using these aspects, you only need literally 1, 2, 3 good trades every month, which means you can spend a lot of time sitting on the sidelines of the market and waiting for the best possible opportunities to come around. So, thank you for watching. I hope you enjoyed this video. If you did, please drop a like and subscribe to stay up to date with all future videos, and I'll see you in the next one. If you want to become an independent, successful trader, my trader program is now open. On this, you're going to get access to my trading course where you'll learn my whole methodology in a 10+ hour long video course. You'll become a technical master. You'll learn to manage risk, get on top of your mindset, and build your own trading plan for success. You're also going to get access to my private Discord for daily trading, live sessions, and deep market insights day to day. And as well as that, every single week I post new market commentaries, educational videos, sometimes request-based as well, investing ideas and tutorials in the members area. So if you do want to take your trading to the next level, head on over to the link in the description and become a trader on the trader program.